Hello and welcome to MAGNiTT and Markets, a podcast where we explore the trends shaping Islamic and global markets. I am your host Hassan Jivraj. If you enjoy this episode, be sure to like, share and subscribe. And don't forget to leave us a rating. You can also follow us on LinkedIn and Instagram at MAGNiTT and Markets, or drop me a line at hassan@majlisandmarkets.com. In this episode, we're joined by Philip Bahushi, founder and CEO of MAGNiTT, the leading startup data platform for emerging venture markets. In our conversation, we discussed the region's VC ecosystem, its challenges, opportunities, and how MAGNiTT is bridging the gaps with reliable data and insights. Philip also shares his outlook for 2025 and what this means for founders, investors, and the wider ecosystem. Philip Bahushi, welcome to MAGNiTT Markets. Great to have you here.
Thank you very much for having me. It's a pleasure to be here.
Yeah, this conversation, I was just saying to you offline, it's taken 6 months to organize a bit of back and forth between your team and myself, but I'm glad we finally made it happen, and I'm really grateful for coming onto the platform. But Philip, you've got like a really interesting background, and particularly your shop, MAGNiTT, is really fascinating to me, and it's been really helpful to me when I'm writing my articles and indeed doing podcasts with entrepreneurs, investors, and other people within the region startup ecosystem. But before we get into all of that, could you give our listeners your early life and your background story?
Sure. Well, thank you. Thank you for being patient. I always like to have something meaningful to talk about. So the end of year is always the best time to kind of share some of the latest insights. So happy to be here and happy to share some insights. Not to bore all the listeners, but I'm British Iraqi originally, brought up in the UK, was educated at St. Paul's and then the London School of Economics, where I studied economics. Ended up going into consulting, which was contrary to the majority of my graduates who all went into banking, where I realized that I was more interested in building businesses and the story around businesses and consulting and supporting business development, as opposed to just the pure finance of the public markets. At Oliver Wyman, I started in the London office, and the story goes that I started as the biggest intake in 2007 that they had ever had of fresh graduates. And of course, let's all go back, and it's been quite a while. It was the onset of the financial crisis that came to be known in September of 2008, but the ripple effect of that already started in 2007, and I found myself in London, not doing much on the bench, as they call it, or the beach, doing project work internally. And I was given an opportunity in January of 2008 to come to the Middle East, where I was in Kuwait on a project working for one of the largest banks in Kuwait, and discovered the Middle East. And that became my journey to where I am still here today. Moved formally in January 2009, went on to work at Barclays in 2010, where I was chief of staff to the CEO of the region, again, with a focus on trying to understand the business and support the strategy side of business development within the finance and finance space. Went on to do my MBA at INSEAD in 2013, where I was both in Fontainebleau and in Singapore. And that's where I fell upon entrepreneurship as a concept. Obviously, I knew about businesses and entrepreneurship, but I did every single elective for entrepreneurship. And it was during the startup bootcamp, which is effectively a super intensive 4 or 5 day course where you start on a Thursday, Friday afternoon. You pick a team, you come up with an idea, and you develop that over a 3 day period and then pitch it to investors. At the end of it, where the actual concept was, what is Vivino now, was what we actually pitched as a concept. So a wine app for purchasing wine and a ranking of wine and scoring. But I understood and discovered all the challenges of how connecting founders and people to ideas and information and data around entrepreneurship was basically pretty lacking. And again, in 2013, it's not what it is today. Graduated, worked in the family business for a year and a half, and then decided to start my own venture. And since 2015-16, have been building out MAGNiTT for the region.
Amazing, amazing. Yeah, no, it sounds like you've had quite a journey. But Philip, what was the first, when was the first time specifically that you heard about like the region's ecosystem? Was there like a story or like a example that thought to yourself like, this is like really interesting?
Not really. In so much as I mentioned, I discovered the world of venture capital and entrepreneurship during the MBA. And of course, a lot of the case studies and a lot of the literature was around US or European venture and not really the Middle Eastern venture space. As I mentioned, I kind of joined the family business based out of Dubai, where I was living. And when I decided that I wanted to get into the venture space, I just started going to a couple of meetups and venture builder spaces. So there was a couple of incubators and places. The original idea of MAGNiTT, which people might forget, was to connect MBA entrepreneurs to investors, and so it had nothing to do with the Middle East. It was a connection platform built off the concept of Tinder to basically disrupt the connectivity of the people connected in entrepreneurship, where it was difficult to bring two parties together on a very simplified platform. Um, so it was meant to be a niche market in MBAs specifically to start off with, and then to go to graduate schools, and then to become a larger, undergraduate schools, and then to become a bigger platform. But to your question, being based in Dubai and interested in entrepreneurship, I naturally started going to, and I remember the STEP conference with the STEP First conference that I went to. There was a meetup in 5 where there was a VC that was speaking, where I learned about some of the local ecosystem. But in the first probably year of developing MAGNiTT, I was based out of Dubai, but it was not servicing the startup ecosystem in the region. It was only once I decided to get rid of the concept of the MBA and focus on the region, which came 12 to 18 months later, that I really kind of immersed myself in this part of the world.
Amazing. And speaking about MAGNiTT, Philip, maybe you could tell our listeners what exactly is MAGNiTT and what do you exactly do there?
Yeah, so I mean, we pivoted probably about 5 or 6 times. So I think it's more interesting to know what the current version of MAGNiTT is. Our stated goal is to become the leading private capital data platform for emerging markets. We have historically been a purely venture capital data platform, but when you look at private capital, that includes private equity, private credit, real estate, infrastructure, and we aggregate data for basically not US or European markets and focus on geographies currently the Africa, the Middle East, Southeast Asia, Pakistan, and Turkey, and selectively keep adding geographies that are not developed venture markets like the US or Europe. And the platform is a SaaS solution, which is an aggregator of comprehensive, accurate data in these markets based on transaction and company data. But then the tool allows you to manipulate the data, chart, analyze, and we create proprietary research specifically focused on the emerging market space with our research and intelligence team.
Fantastic. And Philip, what kind of data does MAGNiTT collect? Like, does it collect like very generic vanilla data? But because I noticed you guys collect very specific data on very like hard markets to cover.
Absolutely. I mean, I mentioned we did several pivots, but the reality is that one of the things that I came into realizing is that we live in a very opaque part of the world.
Mhm.
So when you are in the UK, you have the company house. Every single company is registered with its board of directors, shareholders, transactional information. And so you don't have much to compete in terms of access to data because it's the regulator that provides that. Even when you go to the US, and it's a bit more opaque than maybe the UK, but you can pull information from SEC filings, you can pull it from different regulator bodies. It's a much more developed market. There's a bit more transparency around that. Here in the region, born out of the Middle East, there is no regulatory body that you can pull information from. In fact, the majority of funded companies are BVI, Cayman Island, Delaware entities, which have operations in specific geographies. So our focus has been and remains, but looks to kind of diversify into other private capital segments in transactional level information around companies and investors in the markets that we cover. And so that may range from what's the company's business, what sector, what industry, how many people, financials around the company, and then transactional information. How much was raised? What was the percentage dilution? When was it raised? Who are the investors? What's the shareholding, etc. So it's transactional level data for the markets that we're operating in, which now spans Africa to Southeast Asia.
And how difficult is it to source this data and to just go? Do you have like a methodology that you use to track this data and to find it?
Yeah, we're very transparent with our methodology. You can find, and we were just publishing, as I mentioned, our end of year report. And at the back of the report, you can have a full listing of the methodology. But effectively, there's three ways of aggregating the data. One is scraping everything that's publicly available as a source. And we have a data science team that's continually capturing whatever is publicly available from that perspective. The second is that we engage with investors that have made investments in all of the geographies that we're operating in to make sure that their profiles and the information that they're providing is up to date, because that is relevant for the research and intelligence that we're building out as part of the proposition. And then it's an open source platform where people can come and add information, which we then verify either with the investor and or with the startup. So we have a kind of triple way of triangulating data to make sure that we're as comprehensive as possible for the markets that we're operating in.
And Philip, what kind of clients are you serving? Do you serve like family offices, venture capital, or banks? Who are you trying to serve in this business?
So it's a great question. I mean, our traditional clients tend to be what you would imagine. Our enterprise subscription is at around $15,000. And so the focus of our clients are enterprise clients. They are governments who continue to look at how to develop in the markets that we're in, and international governments that are looking to support this specific market on policy decision making, on trend analysis, on company identification, on investor relations. The second bucket is the investor community that continues to want to have their pulse on what's happening in the ecosystem. So they really want to understand what's the latest trends, what is the reporting of the total amount of investment, what are the transactions that they've either made or missed out on, and do their LP reporting. Then you have the kind of support services of the industry, whether that's legal, consulting, recruitment, audit, anyone who's basically interested in the venture capital space. And then the other bucket tends to be corporates that either have a CVC arm, interested in making investments, interested in doing business development, specifically in the venture space. So those are kind of the categories that we continue to focus on and support with the tools and the intelligence that we have.
Amazing, amazing. And Philip, I want to talk to you today specifically about the venture capital ecosystem in the Middle East, North Africa. Maybe we can also touch on Pakistan and Turkey and some of the other markets that you cover. But I'm particularly interested in the MENA VC ecosystem. I think it's a fascinating area. You know, it's a country with about 400 million people, many of whom are very young. And there's been quite a few interesting ideas and a few startups that have come from the region. But I just want to get from your perspective, over the past year, 2024. We're recording this in January 2025. So just looking at things in context in 2024, how would you characterize the region's current VC ecosystem? And then in tandem with that, how would you compare its development over the last decade?
Well, I mean, there's just two distinct questions there. I mean, I'll start from the evolution. I mean, MAGNiTT's been doing this. I've been doing MAGNiTT for about 8 years. So I've definitely seen the evolution of the ecosystem. I like to say publicly now that we're entering the second decade of evolution of venture capital here in the MENA region, dating back to the probably first investors that made investments, the likes of Fadi Ghandour, Pico Capital, MEVP. Their first investments tended to be between 2012 and 2014. So we're now pretty much entering the second decade of that evolution. During that 10-year journey, it's really government focus that has spearheaded the growth of the venture capital ecosystem, specifically in the GCC, albeit we historically saw a lot of investment and venture activity taking place in Egypt and the Levant. There has been a need across the GCC for diversification of economies beyond just natural resources. And one of the things that they believed was key to that was the development of technology, the focus on innovation, the focus on non-oil related industries that can really help diversify the economy, including services and many other areas. That was a focal point post the celebration of entrepreneurship that took place here in the UAE, which was dating back to 2012-13, which kind of spearheaded a lot of the innovation here in the UAE. Saudi Arabia, I can date back to probably 5 years ago, Vision 2030, when they started articulating the need for developing the country in Saudi Arabia. One of the key pillars of that was to try and develop the technological growth of venture and entities here in the region. So we saw this gradual, continual growth of venture capital investment, companies, education, policy, and structures that kind of grow the venture and startup ecosystem. When COVID hit in 2020, I mean, with all of the negative and very sad things that came about from COVID, it was a bit of a double-edged sword, because the reality was it accelerated the need for technological solutions in a part of the world that had historically been very brick and mortar. I mean, I was living in the UAE, you could be in Saudi, you can look in the GCC. Cash payment was the norm. People did not use credit cards. People still went to their local grocers. People did not necessarily eat out. I mean, Dubai is very different, but in many other geographies, home cooked meals was the norm. People went to malls as a point of distraction to get out of the house. People would go and do their grocery shopping and see their doctors as rituals, as part of their day-to-day norms. Once you were confined to a specific location, you quickly became reliant on the need for all of these technological apps that came around to service you, which you may not have considered. And even in Saudi Arabia, I always point to the example that SANA, the regulator, came and made all technological solutions require cashless payment, whereas before everything was paid in cash. So they embraced the idea that these technologies were not only diversifying economies, but became essential needs for the development of the infrastructure of their countries. And since then, we've seen that kind of development of multiple solutions that help support, and I like to say, create efficiencies where inefficiencies exist, using technology that can be scalable using venture capital investment. So that's a bit of a mouthful. It's my definition of what a startup is. But that saw continued growth, but it also increased the appetite from government to see venture investment and to attract international venture investment into the local ecosystem. 21 and 22 were 2 years of incredible growth, and I haven't mentioned once the context of what was happening globally. All of this was happening at a global level and in emerging markets. We cover Africa and Southeast Asia. I'll focus on MENA, but this trend was one that continued globally and within the region of 21 and 22. You then ask the question, what happened in the last 2 years? Effectively, the macroeconomic environment that we found ourselves in post-COVID, where interest rates went into 0%, liquidity was high, there was ecosystems that were flush with cash, cross-asset allocators were trying to put money to work, the crowding out effect effectively encouraged people with interest rates so low to invest in venture. But as inflation creeped up, as things became a bit more challenging at a macroeconomic level, interest rates basically continued to drive the need for allocators to re-review how they were putting their money to work. With interest rates of 4 to 5%, effectively cash became a lot more safer to put into work. Corporate bonds became a much more attractive solution. You look at the stock markets after a little bit of a blip in 2021, we've seen record years in 22, 23, 24, continued growth of the public markets. So people then very much question at an LP level, what is the value or the need for a return, which is likely to be 25% plus in terms of annualized returns to justify investment in that asset class. And as a result, globally, we saw a pullback of LPs in the venture capital space. We tend to forget that VCs have to raise funds. If they've deployed all of that capital, they need to raise new funds. If they don't have funds, they can't invest those funds. And then naturally, what we saw globally, dating back to pretty much 2021, once interest rates went up, was a decline in global venture, according to international publications. In MENA, we tend to see a bit of a delay. That decline kicked in at the end of 2022. And now we're facing the bottoming out of the startup ecosystem. So the report that we've just published shows $1.9 billion of investment. But that headline figure, which some people tried to say is a negative because it's down 29%, still tells a very big story. And I think that's what's important to kind of share. While it's down 29%, we saw an increase in the total number of transactions. we saw a slight increase in non-mega deal investments because what has been hardest hit is late stage investment over early stage investment. Close to 50% of all investments are between $1 and $5 million. We saw more investors investing in the MENA region than we have in the last year. And we saw more international investors investing in the region than in the last year. So while the headline figure is down year on year, there are points and signs of at least the bottoming out of the ecosystem's investment and a likely pickup to happen in 2025. And the last point I'll make is while it's down, it's still higher than the levels that we saw in 2020, which was a record year of venture capital investment compared to the last 10 years gone by.
Philip, if we're talking to somebody who's not too familiar with like the region and the region's ecosystem, which markets, and in tandem again with that, which sectors do you think are the most interesting to, say, international investors or international VC investors?
You made the point that the region is about 400 million people, and that's correct. I mean, one of the opportunities in the region is the size of the region. One of the challenges of the region is that it's very fragmented. It's 17 or 18 countries that make up that 400 million people. Each one has different demographics. Each one has different regulatory environments. Each one has different purchasing powers. In the years gone by, and I give the example of Kareem, which was the big success story of the region, and there's many of them, but that was the one that was the unicorn acquisition by Uber. One of the things that they were most proud, and let's remember, they were acquired just before the onset of COVID. They were proud of being a regional startup operating across all of the geographies, including Africa, Pakistan, looking to operate in other geographies. Since then, given the macroeconomics that we've discussed, there's been a slight pullback. The focus on unit economics and the shift away from scaling at all costs has meant that you need to be a bit more selective. And what has clearly developed is a hub between the UAE and Saudi, if not GCC, that can include Qatar. Egypt, which is a very attractive market, has had some challenges around the devaluation of its currency and supply chain issues that can come from Europe. The Levant, and again, I don't want to go into politics necessarily, has been somewhat detrimental given all of the challenges that have been happening at a political level. So you've seen this migration of talent and startups towards the UAE and Saudi Arabia as the two central hubs of venture capital investment and the concentration of talent and startups for the time being. Not to say there isn't huge talent elsewhere. Some people are operating in a kitchen and HQ model whereby you have an HQ in the UAE and Saudi, but you keep your tech and your design and your marketing teams in other jurisdictions that can be more cost effective. But from a pure venture capital investment perspective, it's the UAE, Saudi, if not Egypt, that are developing as the three big hubs for the region.
And which sectors do you think offer the most? I know it's a bit of a broad question, but like in terms of the sectors, do you think there's like ones that stand out to you off the top of your head?
Yeah, look, I mean, this is no different than anywhere else in the world. So the latest report that we just published across every emerging market sees that fintech is the dominant industry by the total number of transactions. Interestingly, when it comes to capital deployment, only the MENA region saw e-commerce and logistics still as number one and fintech as number two. But fintech was the dominant industry in both Africa and Southeast Asia in terms of capital deployed. I like to characterize that any emerging market tends to have this very similar pattern. The first industry to get disrupted tends to be logistics. The logistics part is basically the first industry that tends to get disrupted because it's a identifiable problem that can be creating an inefficiency that can be creating efficiency using technology. And any emerging market tends to first have that as the point of disruption. And the learning lesson there is that you have examples of that. We talk about the copycat concept, that there are examples of that exist from the US, Europe, and even Latin America or other European geographies. And one of the reasons that people focus on that and why it gets so much venture capital investment, and it's a completely separate point but linked, is that there is a clear path to exit. There are either international acquirers or you've seen examples of how they can scale to growth for potential IPO listings. Hence, the next industry to get disrupted, albeit still globally attractive, is the financial services industry.
specifically around payments. Not to say there aren't attractive solutions in edtech and sustainability and deep tech, but the challenges there are talent, the challenges there are capital, patient capital, research and development capital, and most importantly, where's that exit going to come from if it hasn't been developed globally to the extent that people are attracted at building out a regional proposition?
That's great. Philip, do you think like part of the issue here, or not issue, but thing is that in the US there's a culture of risk taking. You know, you can set up a business, and if you fail, you're not condemned by society, or you're not perceived by society as a failure. And in other societies, for example, you may be perceived as a failure. Do you think that's changing in the region, or do you think it's going to take time to change that perception?
Look, I mean, it's a difficult one. Compared to 5, 10 years ago, I say that we've come a long way. But I do think that stigma of failure is one that continues to remain. Um, I've been saying this even for government entities or people that we speak to. I mean, when you see numbers going down in terms of venture, I've given you a very extensive explanation as to why that's happening. But the headline will be that venture is down 29 to 30%. For many, that's considered as a failure compared to years gone by. And so people don't need necessarily go through the transparency of why that's happening. And I would say one of the biggest challenges, I would point to Pakistan as being a great example of where they're very transparent around failures of companies. There's decent reporting around that. The US is very transparent around. We've seen just last week several companies that were shut down in the US, Bench, Tally, and there's extensive reporting on why and what's happening around them. I would say one of the reasons that we haven't quite embraced failure, although to be fair, there's plenty of people on social media that share their stories and are very comfortable sharing their stories, is that there isn't enough journalistic reporting around the failures, or at least the willingness of the founders and or investors to explain what happens. So part of the reason is that it is not publicly transparent as to what's happening. So while it's improved since I've been doing MAGNiTT, it's still an area of challenge because people aren't comfortable sharing the truths of what builds success and what the reasons are for failure.
And just sticking on the startups from the entrepreneur's perspective, which countries would you say in 2024, and also do you think this year, are going to surprise people in terms of their innovation and deal flow of like new startups?
Which countries you mentioned?
Yeah, which country do you think will surprise us?
Look, I've already told you with the dominant ones. I think the ones that you'll be surprised about is Qatar, because of their new fund of fund initiative and their kind of drive towards investment, will continue to be one of the GCC countries that will continue to attract international startups as well as homegrown startups to set up in that jurisdiction to operate in MENA. We talked about that 400 million. You need to be operating in multiple geographies. The question is, where are you going to base yourself to then operate in many of those geographies? So I think something like Qatar is providing a very different proposition to the UAE and Saudi Arabia, and will continue to grow as a potential hub beyond the two traditional ones. If the macroeconomic environment in Egypt gets better, then I would see a return of venture investments within that jurisdiction. Looking at other hubs, I think South Africa continues to be a very attractive hub for investment in Africa as a scalable hub for talent. A lot of people, not necessarily in venture, whether it be finance or people that are leaving Europe or other jurisdictions for sunnier climes and a different opportunity, are setting themselves up in Southeast Asia, in South Africa. And when we look at Asia, I mean, Singapore remains the attractive hub to set up in Southeast Asia, but Indonesia, Malaysia, Philippines continue to become hubs that are extremely attractive for scale and growth. So those would be some of the ones that I would highlight.
And Philip, from the investor's perspective, do you think that the investor profile in the region, in the Middle East, North Africa, just for now, is do you think it's developing, or do you think it needs more evolution?
Look, I can't speak to that, but as I mentioned, we've just finished the first decade and we're entering the second decade. And so you're going to have multi-fund investors. There were a lot of emerging first-time funds that were set up in the boom years of 2021 and 2022. The data will show
in 2 to 3 years, whether they're still around or whether they've been able to raise additional funds. Success breeds success. So ultimately, the success will lead to education, learning lessons for the GPs, for the teams around the VCs. So I think that this is all part of the evolution of the ecosystem, and that it's natural for developed funds to continue to evolve and learn from what worked and what didn't work. And in the last 5 years, just looking at the chart, we've seen a massive roller coaster of an excessive boom and a gradual decline since then, which will really provide a benchmark for the next 10 years of evolution of the ecosystem. And they can point to what they learned during this period for the next time that it happens.
Yeah, it's just interesting. I was in Dubai last month and I was watching an episode of a Shark Tank, the Middle East version of Shark Tank,
Yeah.
and it's interesting seeing people like Noor Suede negotiating deals from the funding perspective. Do you think like a lot of these are like straight equity deals where they put in cash and take equity, or do you think it's going to be more like debt financing given where the interest rates are?
No, I think it's going to take a while for debt financing to be embraced here in the region. I think we've seen selectively some very big deals in debt financing that have been successful, specifically in fintech and buy now, pay later, especially coupled with an investment round that can hedge the risk that's associated with the debt financing. I've been hearing about venture debt and private credit for a long period of time since 2020 as solutions that can help develop. I think that they're great products and solutions for certain types of companies, but mass adoption of that isn't something that I necessarily see for the time being. I do think that equity investments, whether they're convertible notes or equity transactions for straight equity transfer, are likely to continue. I do think that one area that is extremely interesting is private equity. I think there's a massive opportunity. We've seen the challenges of private equity from the Abraj days. We're still reeling from the impact of Abraj and the challenges for private equity. But if you had to point to one area which is a massive pain point, is late stage investment, pre-IPO, for companies that have probably raised 100, 200, 300 million. And the region is ripe for disruption in the private equity space. And I think that that is a solution that is a focus for governments around the region to try and support.
Yeah, no, what's interesting, a few months ago, I spoke to an entrepreneur who is based in Iraq and she runs a green tech company. And one of the things that she mentioned to me was that the safe structure is not widely used in the Middle East. I mean, these kind of more sophisticated financings are still quite nascent, right? Like as you mentioned.
I wouldn't agree with that. I mean, maybe in Iraq, but definitely based in the UAE and Saudi Arabia. Companies like 500 Startups, many of the accelerator programs, many of the developed legal firms are well versed in convertible note structures. And for many of the founders that I would have been speaking to, especially at the seed round stage, they're well adopted. Now, Iraq is very different. I'm Iraqi, so like I don't know whether it's the risk that they don't want to take and the structuring around that, because if you're not directly converting, it's more of a challenge. But when you're looking at slightly more developed ecosystems, whether it be Egypt, the UAE, or Saudi, safe notes and convertible notes are relatively well adopted, specifically at earlier stage rather than late stage.
Philip, as we bring the podcast to a close, I've noticed that you guys have published this report on the regions or your outlook for the region's ecosystem. Maybe you could tell our listeners some of the themes from the report.
You mean the future outlook or the themes looking backwards?
The theme that I think that you guys published yesterday, where you mentioned about AI, the collaboration between MENA and Southeast Asia.
So this is a forward-looking, what I expect is going to be happening in the next 12 months. So I love my friend Ali Habib, who's the founder of Anghami, always talks about how we have a crystal ball here in the region, which allows us to predict what happens here in the region by looking at what happens in the US, but then delaying it 6 to 9 months because there tends to be a lag in many of the activities. So some of the things are basically taken from that. When we look at the actual trend, I already mentioned, whether it be because of reporting delays or because of just general sentiment delays, I expect the next year will be a better year than this year. We've just seen a publication on US investments, which is up 5%, global investments, which is up 5% compared to last year, which, as I was mentioning, shows that things are picking up. Here, we're still on that decline. So I think from a positive perspective, we probably bottomed out in terms of venture capital investment. And if interest rates continue to come down as they're expected to do next year, assuming that there's no financial crisis that kicks in, we expect that late stage funding is to pick up again and that we'll start seeing investment pick up heading into 2025. Last year, globally and specifically in the US, in the public markets and in venture, was largely driven by venture capital investments in AI. And that is something that categorized the growth of the ecosystem and supported its rebound. And if you talk about the Magnificent Seven in the public markets that drove to record levels of the S&P and NASDAQ, that's been a hot theme throughout the US and more developed markets. Here in the region, AI is relatively nascent. People have caught on to the concepts of what's happening globally. Those companies need to be set up and funded. And I anticipate that that will now become a hot subject heading into 2025, venture capital investments, specifically homegrown AI solutions, whether they're AI native or AI enabled, that can actually receive venture capital investment for local solutions from that perspective. Third area, there's been a lot of conversation around IPOs. This is a hot area of subject. People are talking about the lack of exits, the lack of liquidity. So government focus, specifically within the UAE and Saudi Arabia, is trying to support the listing of companies where it makes sense. And a term that was told to me last year at the latter half of the year is we're actually trying to become IPO ready. I don't know how many IPOs will happen. I predicted 4 to 5, but I know that there are probably about 30 to 40 that are getting IPO ready, running through the due diligence process, running through the accounting process, running through the structuring process to see whether they can meet the requirements to actually become IPO ready. And in that journey, they may raise investment because actually they've cleaned up their books and improved their operating efficiency. So I expect that we'll start hearing, and there's already an announcement in Saudi Arabia of a company that will be listing on the local Tadawul. So that will be one area of focus. And the final two are, I believe that the geopolitical situation allows for a perfect opportunity of cross-pollination between Southeast Asia and the Middle East. Very similar demographics, very similar opportunities, many similar challenges, obviously differences and nuances, but a stronger government relation between Southeast Asia and the Middle East. We'll see more capital flow in both directions and migration of companies and founders and investors in both directions. And the final one is, given the efforts of the sovereign wealth funds here in the region, in attracting global players to the region, we'll see a bigger role for international investors deploying capital into the local ecosystem.
Amazing. And how can people access this report, Philip?
Thank you. So, the free version of the Emerging Venture Market Report is available on the platform. They can go and download that. That is high-level numbers categorizing the ecosystem developments in Africa, the Middle East, and Southeast Asia. And if they're interested in becoming a client and deep diving into the raw data, the analytics, our premium reports will be doing a deep dive into the UAE, Saudi Arabia, Egypt, Southeast Asia, Africa, a full listing of all of the most active investors, a valuation report, an M&A report, and a venture debt report. All of those will be published within the next 8 weeks. They can DM me or reach out to the team, and happy to share a link and speak to the sales team to get access to a subscription.
Amazing. And Philip, as we close, do you have any upcoming projects other than this stuff that you've all mentioned? Is there any projects that you're working on or coming up in the pipeline?
Well, as I mentioned, our goal is stated to become the leading player in private capital. So we're exploring the other pillars with private equity, private credit as the key area of focus. And we'll continue to try and develop towards our mission of becoming the leading player for emerging markets in that space.
Amazing. And what's the best way to reach you and the team?
So I am relatively active on LinkedIn. So if anyone wants to follow me on LinkedIn, I regularly post, and you're welcome to drop me a DM there. And for the team, if it's for sales at magnitt.com, or to visit our website. And actually the most important thing is, and if you can share it, the link to the report, and following that, somebody will reach out and you're happy to connect with the team to get more information.
I'll link in the show notes after the conversation. But Philip Bahushi, this has been a fantastic conversation, and I wish you all the best for 2025.
Thank you very much. I really appreciate it. And all the best to yourself, and enjoy Dubai.